Welcome to the Facts versus Feelings podcast. I'm your host, Ryan Detrick, and I'm joined by my co-host, Sonu Varghese.
Cutting through the noise in 30 minutes each week with Ryan Detrick, Chief Market Strategist, and Sonu Varghese, VP Global Macro Strategist, taking out the boring and helping investors focus on what really matters. A quick note before we start the show. Investment advisory services offered through CWM LLC, an SEC registered investment advisor. Carson Partners, a division of CWM LLC, is a nationwide partnership of advisors.
Hi, everyone. Welcome to the 44th episode of Carson's Facts versus Feelings with Ryan and Sonu. We have an extremely special podcast today for all the listeners out there. Tom Lee of Fundstrat is with us. Tom, before we even start, I have to ask, people ask all the time, is it true you drink the tears from bears every morning?
I don't know. They might evaporate pretty quickly. I'm not sure it makes it to our offices in time, Ryan.
Okay. We are thrilled, Tom. We've got 30 minutes, and believe me, we're gonna have a lot of fun with this. But we're huge fans. I've been following you for years, and it's just an honor that you're going to join us on the Facts versus Feelings podcast. Sonu and I, for the YouTube people, a YouTube video, we are wearing bull horns as we speak here. So little play on the bull market. And again, we are titling this one.
Mine's starting to fall off a little bit. So
we'll talk about that. What does it mean if one horn falls? Yeah. But we are titling today's podcast "Talking About the Bull Market" with Tom Lee. All right. Well, Sonu, we've got 30 minutes. This is going to be a lot of fun. If you want to fire away with hopefully the first softball, let's not start too hard, but let's see what's going on in Tom's brain here.
Tom, I think this morning, so we're recording this on Tuesday, it's July 25th. This morning you were on CNBC. So I was just curious, what's the start of your day look like? What do you look at first thing, in the morning? I mean, we don't have to get into breakfast and all that, like the Mark Wahlberg kind of, thing. What do you look at with, markets and all that?
Well, I guess when I wake up and outside my morning routine, the first thing I'm going to check on markets is the futures overnight. I just want to see if there's anything that is going to be surprising or variant. And then I go through my emails because overnight there's a lot of communication that takes place. And then I go on to x.com because or formerly Twitter.
It's yes.
And that's because I don't know how everyone else feels, but increasingly I feel like that is a good place for finding primary information. I think news, personally, I think it really only breaks on two platforms. It breaks on Reddit or it breaks on x.com.
X.
Yeah. Or X, yeah.
Are we gonna say it's Zeets now instead of tweets? Or is that what we have to call it?
Yeah, I don't know. That's going to be pretty confusing, right? I think there's going to be a lot more X's used. Like when you do word count and like machine learning, they're going to find a lot more X's now appearing.
Yes.
Yeah, I don't know about that. You're not changing Fundstrat's name anytime soon, are you? You're keeping that, right?
Yes. In fact, we chose the name Fundstrat because we figured it was going to be future-proofed against people's names. There's a lot of people when they start a firm, they put their name on it, but then over time, that person might not be the person that is leading the firm anymore. So, we chose a name that wouldn't be tied to a person.
That's great. I mean, so I know a lot of listeners to this podcast know Sonu and I came into the year overweight equities. Sonu does amazing macro work with our more than 350 Carson partners saying, listen, the odds of a recession is much smaller than most people think. So, Tom, you were in that bucket as well, right? And I know we've been lumped together by a lot on social media, Carson Group and yourself. I know Ed Yardini's in there, Renmack's in there, JC Peretz is in there. I'm probably forgetting a couple others, but not many of us were bullish. How in the world can you wake up in the morning knowing the heat you took? I mean, you took the brunt from a lot of us bulls. They yelled at you more than anybody. Now, obviously, it's worked, and that's great. But how can you separate that when every morning you wake up and you've got literally, people on CNBC just calling you out repeatedly? I'm talking about, the first quarter of this year when you were bullish, everyone thought you were crazy. How can you do that every day, taking those body blows?
Yeah, I mean, that's a great question. Because, it's a lot easier to be in the middle of the crowd, right? There's a reason
Hmm.
people, like in our business, we always say people stay in the middle of the lane, or they stay in the fairway because they don't want to be playing out in the rough. I think it's been easier for me because, one, we we're kind of used to being a little non-consensus in our views, since we started Fundstrat. But what many may not realize is, in the first half of my career, the first 15 years, I was a wireless analyst, which wireless in 1993 only had 34 million users. And no, there weren't companies besides McCaw Cellular and AirTouch that actually made money, or Vodafone. But most of them were money-losing enterprises that had spectrum that was valuable, were always borrowing money. And my group, Cellular Services, was considered a bubble from 93 all the way to 2007. Nobody ever thought the industry really deserved to be equities. So I was used to people just saying, Tom, your group is basically a structural short for 14 years. And so I'm used to non-consensus views.
Got it. One more quick
That's
one for me,
fascinating.
Sonu, then you can jump in. Tom, I'd like us to give our titles. Actually, what is your exact title over at Fundstrat there?
It's a couple things. I mean, I'm a co-founder because there's two of us that started this. I'm the head of research and I'm a managing partner. So I don't know. I usually just say I'm a co-founder, managing partner, but maybe functionally head of research.
Yeah, we all wear a lot of hats
Definitely.
and a lot of horns if you look on the video. Go ahead, Sonu.
No. So going back to Ryan's question about, being bullish coming into this year, if you rewind, let's go back to December and even January of this year. Why were you bullish? Maybe,
Well,
just getting into your process a little bit.
yes. I mean, going back to the start of the year, there were a few things that we wrote about that were important. One was, that we thought inflation was going to undershoot consensus. And I think that's fundamentally the most important thing, because the Fed itself can't look forward and make that prediction. But we were looking at inflation internals and believed that. The second is, we thought there was this thing called unkillability about companies because they were bracing for this torrential hiking of rates. I mean, the Fed signaled it pretty clearly early last year. So companies aren't surprised. And as you know, a recession is a sudden change of business conditions. So companies weren't caught by surprise. But the third, and I think people overlook this, and we wrote about it, is that earnings didn't matter as much this year. It was actually about the drop in the VIX. So we had shown that every time the VIX averaged over 25, I don't remember if it was 25 or 23, the stock market was always up over 20% the following year. So we just thought the most influential factor was actually the VIX falling rather than what earnings would do. So, but of course, as the years progressed, it's become a lot more about the economy having traction. So I think, it's really improved, but there were some easy reasons to be bullish at the start.
It's interesting. And for everyone listening, the VIX is the market expectations of future volatility or volatility over the next 30 days for the S&P 500. Right.
Yeah. Tom, let's talk about travel. Since I just traveled, I had some fun. I know you were in Japan recently. I mean, how much do you travel for this job? Obviously, you're the face of your company. You're out there all the place doing research. How do you find time to do research and travel? Maybe that's a question for me because I sometimes struggle with this.
It's tricky. I mean, from the inception, from the time I was a strategist at JP Morgan starting in 2007, travel's always been exhaustive. I think at JP Morgan, one of the years, I think I might have logged like almost 150 travel days.
Wow.
So it's extensive. At Fundstrat, it's a bit less, but we have clients in 26 countries. So, so it means I am traveling to Europe, Latin America, Asia often. We have a big research team. I think there are something like 14 or 15 researchers here. So they do a lot of the ingestion and the data science and computational work. And then we do try to plan our work for the next week ahead of time. So we already have a lot of stuff kind of in the queue. And then I do record a daily video. And that doesn't take too long. So I think we just managed to do things, but we often have to do it from the road.
Well, like I said, I'm in a hotel right now. One quick one, I would shout out to Finland. And you just mentioned 26 companies. Sonu and I talked recently about how we have some listeners in Australia, and I had some friends in Finland say, hey, we listen to your podcast also. So Tom, this podcast is in Finland as well. You ever been over there? You ever been to Finland? It seems like it's literally one of the most happy countries. You see those things, that part of the world, they are so happy. You ever been up in there?
I have, because I believe Nokia is from Finland, because I used to spend time with Nokia and Ericsson, and I'm sorry, one's in Sweden. I think Ericsson's in Sweden, and Nokia is in Finland.
I believe so. Interesting. The whole international aspect of what you guys do is interesting, because everything, more often than not, we're talking about U.S. markets, right? Obviously, because it looms so large, and the fact that we are in the U.S., obviously. But how does that international perspective, even having international clients, impact all the work you do in terms of looking at global markets?
Well, it's actually, that's really kind of the heart of it, because I think a lot of our work is, we do work to create the research and the primary information, but then we want to see how clients react to the information, so that's just as important. And what I found is that regionally, there's a lot of anchored biases. I think in Europe, there's the macro world tends to be bearish. I mean, I don't really, in the 15 years I've covered Europe as a strategist, they're rarely positive on markets. So there's an inherent bearishness. Maybe it's just the sensibilities. And when I'm in Asia, when we first went to Japan, there was a huge amount of caution of owning equities because they were just such big savers. We really helped grow the cash equities business for a lot of our clients there. And to give you some insights, even a country like Korea where we're doing some business, do you know that cash, they're a huge percentage of cash trading on the ETFs. I mean, you'd be shocked how much. And then Latin America tends to be very tactical, like trading oriented. So if anything, it just tells me the market is not a single entity. And I think that's what a lot of people do when they make kind of blanket statements like, oh, curve's inverted, the stock market goes down. Not everybody literally moves their 401k because the yield curve. I mean, a lot of people buy stocks. And I think too many people tend to think, oh, here's a macro piece of information. It should take the S&P down 10%. Like I feel like that's a constant conversation we have is like, oh, student loans, isn't the market go down 10? And, not everything macro has to take the market down.
Yeah, I like to think about it as indicator macro. It's like your dual axis chart problem. I mean, you show PMIs, a yield curve on one side, and then the S&P 500 on the other side, or M2. And then it's like, the sky is about to fall.
Yeah, that's right. Or the Fed balance sheet, people like to use that one.
That one.
That was a favorite. So we've beyond hit the halfway point of the latest episode 44, Carson's Facts versus Feelings. Honored to be joined by Tom Lee. Tom, I'm going to make sure I say all this correctly. Special for listeners to this podcast, in today's show notes, there is a link that you can sign up for 30-day free trial of Fundstrat, all the cool stuff that Tom and the team put together. Then you also have access to a 10% discount for any future memberships. So again, definitely check it out. We're huge fans, and it comes out every day, lots of different views, and it's great. Now, Tom, you mentioned earlier JP Morgan. One thing about this podcast and working at Carson Group for the year I've been here, right? We work with financial advisors, right? We work with people that own their own companies, their entrepreneurial spirit. Clearly, you had a good job at JP Morgan. What drove you to leave there? And I believe that was the last thing, right? JP Morgan, then Fundstrat, I believe. If I'm wrong, let me know it was in the middle. But what made you want to go start your own thing when you didn't really have to?
That's a great question. First of all, I was approaching like lifer status at JP Morgan. when you hit certain benchmarks, they send you this link and you get to choose different items. And so like if you're there long enough, you get the gold watch.
Yep.
And it's a great place. I mean, I enjoy coming to work every day, and I had known people a long time, and the sales force and the research team and the economists, they're top notch. And Jamie Dimon, I mean, you can't really find a better CEO. But I was struggling with the idea that I was 45 at the time, and I realized, if I stay here, this is my last job, and and I'll spend the next 20, 30 years, which I think a lot of people liked, but to me, I had this view that you have to remember in 2014 the stock market was it was doing well, but it wasn't really owned by retail. And I just thought that the stock market was going to really widen in terms of participation. And so, like I wanted to really create a research product that would work for both institutions, but for people who also wanted to understand the stock market. So we, at our company, we actually have two different divisions. We have Fundstrat, which is our institutional research, and then FS Insight, which is a separate product, but it's designed for people who want to understand macro, but don't want to sit here and have to go through, the dense presentations we put together for our institutional clients.
Interesting. How has your background in equities, especially, and you mentioned the wireless thing, which I find fascinating. How has that informed the way you think about the economy? Because it's a very different place from, we just literally talk about indicator macro, but your views. You've done that bottom up work for so long in your career, and now you're doing more macro and looking at the economy and things like that. So I was wondering how that progression has informed everything you do right now.
Yeah, well, that's a really important question, and actually very few people ever ask me about it. But what I think the listeners have to appreciate is that when someone is a stock analyst, which is what I used to be for 15 years, you live and breathe your industry. So you spend time understanding your companies, and you become almost like a business owner, like you think like they do. Mm-hmm. But the realities of the marketplace force you to be so short-term oriented. You only care about quarterly earnings, and then are they going to beat or miss? But there are two things that I think I really learned doing bottoms-up work for an industry, especially an industry that was hyper growth. I mean, 34 million to 7 billion users. The only industry that grew faster is internet, right? So, I mean, wireless was really a hyper growth industry. And one of the big, revolutions. I think two things were really important. One is I was 20. I got lucky. I was 23 when I became a senior analyst, like covering stocks. I mean, because my boss left and they asked me to just pick up coverage. So I was super young doing wireless when it was only 34 million users at a time when everybody else who was a seasoned analyst was in their 40s or 50s. It's a huge difference in perspective because older people never appreciate new technology. So a lot of my clients I'd see and I'd be like, wireless, it's going to be a really great thing. They're like, it's a yuppie toy. And by the way, Verizon and Bell Atlantic or SBC, which is now AT&T, but they're going to make cordless phones free. Sorry, they're going to make cellular free like a cordless phone because they want to protect their landline and long distance business. So they couldn't see how important wireless was. So I did a lot of work that argued that there's a vintaging, that people in their 20s become the incumbent when they're 60, right? So if the adoption rate is like 80%, and at the time, I think only like 20% of 60-year-olds had a cell phone, but like 80% of young people. My argument was that it was going to be 80% over time. So I learned to really understand demographics in terms of how growth is adopted. And like AI is an example. Like when you look at AI, everybody who's 50 commenting on it isn't the person that matters. It's what is a young person going to do? Mm-hmm. And the second is my company's never made money, but they also borrowed a lot of money. So I learned back then to always call the high yield desk, asked for the levels of the bonds, and the bonds that were rallying, I knew were the ones that the stocks would go up. And so I always looked at credit as leading stocks. And when I made the switch in 2007, a lot of people asked the same thing, like, Tom, you're a wireless analyst. How could we possibly ever listen to you as a strategist? Like, what do you know about macro? And, but within 2 years, I became institutional investor ranked as a strategist. And part of it is that, what I was applying in both the views about demographics and credit really lend itself well to the market overall. So
that's awesome. One of the things I love about you and your company is the adaptability. You just kind of talked about some of those things, Tom. I said this before, and I'm going to say it again. My favorite tweet all year was when a particular person on CNBC was calling out you and Fundstrat, saying, listen, I don't know what these guys at Fundstrat are drinking. You guys made a tweet of Tireless Ken, and you've zoomed in on him, and he was drinking, and he pulled up the thing is, I drink Dr. Pepper or Diet Dr. Pepper, and chugged it. And you shared that video. It was hilarious because you guys got the joke that, listen, here's how we do things. You can beat us up all you want, but we're going to have some fun along the way. And I don't even know where this question's going, but I just wanted to tell you, I love the way that you guys present yourselves from that way. And who came up with that idea to show what Tireless Ken drinks with the Dr. Pepper? I'm telling you, find that, retweet that today, Tom, or maybe tomorrow, and people listen to this, because it is hilarious.
Yeah.
Because you guys are getting called out on CNBC. You made some fun about it. I mean, you had some fun with it, is what I meant to say.
Yes. I mean, one, it's important to have a sense of humor because we all know the markets are unpredictable. I mean, there's no way any of us really know. We know probabilities. That's really what I live in, but I don't really know the future. And the good news is almost everybody here has a good sense of humor, including Tireless Ken. Who
is he, by the way? I should explain who Ken is to the listeners.
Ken is our head of data science research, and he has a master's of operational engineering from Columbia, and he does a lot of the programming to ingest the data that we have. But Carrie has a sense of humor. She's our media head, and she suggested we do like a little Mad Men, I'll have what they're drinking kind of thing. So, you know what? We have a sense of humor here.
That's awesome.
And we need to, because otherwise we'd be going crazy, right?
Yeah,
you can't take yourself too seriously in this business.
Yeah, I mean, Sonu and I literally have horns on our heads as we speak, so maybe we provide too. Sonu, I think we've got time for
I'd wear a bear
more.
suit if you guys sent me one.
That's true. Yeah, we can mix it up a little. So this is crazy, Tom. We've got like a couple minutes left. This has been so much fun. Sonu, probably time for like one more from you and one more from me, and then Tom's off the hot seat.
Yeah. Well, since we don't have too much time, I'm going to ask you. You mentioned inflation is coming down this year. In your views, that was a big piece of why you were bullish, along with the VIX going down. I know it's still 5 months out from 2024, but thinking about the Fed, at least Ryan and me are in the camp that we don't think the Fed is going to cut rates this year, but next year could be a different story, right? So I'm curious what you think about where inflation's going next year, right? Especially probably, let's say, Q1, March to June of next year, and what do you think the Fed does?
Yes, both are important questions, and I want to caveat by saying, inflation is unpredictable largely, as is the Fed. But I think it's helpful for me to reference maybe like consensus views, because I think for the most part, people think inflation's pretty sticky, and it's going to be hard to come down because of labor. And so let's say that that's kind of the prevailing opinion, and that's also what's influencing the Fed. We've written extensively about the fact that the downside risk to inflation actually is much greater because, for instance, like on the good side, used cars, if they were to go back to fair value, used car prices actually have to fall 30%. Wow. And that was like, in 2021, literally the single biggest contributor to inflation, you'd unwind almost all of that. We're talking it probably takes out close to 7% out of CPI in total. So if you spread that over 12 months, that's 0.7 or something. And shelter, we know, is going to stop contributing 8% a year. And then on the good side, 42% of goods are 45% of CPI components on a weighted basis are in deflation right now. So I think that there's like if I put it together, and so no, I'm not an economist, okay? So this is not a forecast, but if I put that together, I think there's a chance that core CPI has below zero 2 or 3 months this year. And that would really ding the trajectory of inflation next year. I think we could be undershooting by a pretty big margin. And from a Fed perspective, 12 of 18 FOMC members today think we have to hike one past November or past. So after today, after tomorrow,
Or yeah,
12 of 18 think, for the Wednesday, July rate decision, 12 of 18 still think you have to hike 1 or 2 more. I think that that's going to quickly go to dissolve to zero. And so to your point about cuts, I mean, if we're maybe 100 basis points below where consensus expects, the Fed can't stay at 5 because then it's overly tight.
I think we're kind of in the same camp there, but yeah, no, that's definitely not consensus or the prevailing opinion right now. Everyone says, "Oh, inflation's going to be sticky. You have to kill the labor market to get inflation lower."
Yes, that's right.
Yeah. So again, episode 44, Carson's Facts versus Feelings, Ryan and Sonu with Tom Lee. Tom, thank you so much. I think we're almost at 30 minutes. When you're having fun, this was a lot more fun than CNBC earlier, right? I hope.
I like this. I like formats. I like podcasts a lot. Yeah, because we can really sit and talk about it.
Exactly. Here's one maybe you didn't see coming, but you're on our podcast. How did you celebrate Barbenheimer? Did you go see both of them? Did you see one of them? Which movie did you see last weekend? You seem like a Barbie fan. I'm teasing. I don't know. I'm joking. I didn't see.
Can I add one more? Or Taylor Swift? Which one?
True.
Okay.
True. Yeah.
I can answer that. Of those 3, I did select one.
Okay.
I watched Oppenheimer last weekend.
What'd you think?
It's great. I mean, I love Christopher Nolan, but I'm just fanatical about his history and the events of history. I mean, I think that's really helped me understand markets better. But I'm actually reading Truman's book by David McCullough, so Oppenheimer ties into it really closely.
No, it does. How about last question, Tom? And I always like to ask this one. Any mentors that you've had throughout your career, and maybe 1 or 2 things that they've kind of taught you that you still use today as you're running Fundstrat?
Yeah, well, I've had many mentors. I mean, for anybody who's young, you can't succeed in your life without having someone above you helping guide your career. So, I mean, I would say I could never have gotten anywhere. I mean, I grew up in Michigan, Midwest Asian in the early 90s trying to get into Wall Street. So you can only succeed with mentors. But I mean, there were many that were influential. I think one of the most important to me was Ted Johnson, who was head of research at Kidder Peabody, because he emphasized the importance of really integrity and treating people with, I wouldn't say kindness, but fairness. And I think that was really important. And when I was at Smith Barney, Kevin McCaffrey and John Hoffman were the head of research, and they gave me my first shot. I went from a small firm, and they said that they're bringing me into the major leagues to cover a sector. And without their sort of betting on me at the time, I would never have gotten anywhere. So, it's important to find a good mentor.
Yeah, I think it's a great way to end this podcast. Love it, Tom. From Sonu and I, everyone at Carson Group, thank you so much for taking time out of your busy schedule. To all the listeners, check out the show notes. There's a link again to that free 30-day trial and 10% off a future subscription to Fundstrat. So with all that, everyone, episode 44 is in the books. Thank you, Tom Lee, a ton. This was awesome. I know our listeners are going to love it. And shout out again to Finland, those listeners in Finland. We'll see everybody next week. Take care.